a new survey launched by CNBC surveying upper income Americans making over $100,000 a year shows that the consumer sentiment has declined dramatically. And the polling is showing that it's due to the tariff situation. The poll shows that their consumer outlook is at its lowest level in 7 years. So the survey is showing that the decline in the S&P 500 since Trump has taken office has been about 8.5%, is one of the reasons for the negative consumer outlook amongst earners making over $100,000 a year. Amongst the people that were polled in this survey, they point to the tariffs being, the reason for them having to postpone purchases, having to stock up. And so a lot of people are looking at the impact that the tariffs and the economic situation is having on their investments, especially when you get into over $50,000 a year, where people are, considering and or making investments in stocks and different financial instruments of the sort. And so, people are having to decide whether or not they want to hold their positions or if they want to dump, obviously, right? And so the second thing that they're considering is whether or not we're headed for a recession. Technically a recession will be marked as 2 consecutive quarters of negative GDP, right? So GDP, gross domestic product, is basically the total amount of our economy, what we're producing, right? Productive consumers as a whole, as a country. And so when you have 2 consecutive negative quarters of GDP, then, that means the economy is shrinking. They consider that recession. So there's this, we're going into a recession. We're going into a recession. Fear, uncertainty, and doubt going around. And so that is weighing on this group that's been polled, $100,000 or more earners, in their decision making. And now the thing about this level of income is that this group has discretionary income, okay? Meaning that they're making enough income to where they have income left over after the expenses, right? Just like we talk about. You want to have more income coming in than you have expenses going out. And so due to the fact of this group having, being over $100,000 in income coming in a year, they're able to be more flexible. They have more discretionary income compared to middle class and lower class, where they don't have the discretionary income coming in. Things are a little more tight, right? And so those groups, the middle class and lower class, is basically having to go into debt, having to use debt in order to, make it through the economic uncertainty and possible recession. And to be in a situation like that where you're having to use 100% debt, just to make it through your everyday lifestyle, I mean, that's pretty scary, right? That's a situation that you don't want to be in personally. That's a situation that you don't want to have your family in. That's a situation that you wouldn't want to have your company in. That's a situation that you wouldn't want to have your country in, right? So what does it all come down to? Well, once again, like we talk about, as productive consumers, income. You got to have income. Multiple ways to get income. You can work a job for income. You can start a business for income. You could do a side hustle for income. Okay? You could get creative. Go through, see where there's a problem, see where there's a need, and provide a solution. And your solution may require you to do some work. Okay? And for that work that you do, you can get paid. So you got to have income, first of all. Second of all, your income has to be higher than your expenses, okay? And that comes from budgeting. So you got to have a budget. You got to know how much you have going in, how much you have going out, you got to track it and manage it. All right. And now that's where you get your capital, investable income that you can take and you can invest with. And so the group over 100,000 that's worried about their investments and whether or not they should hold or not, well, newsflash, if you was gonna sell, you should have already sold, right? You should have sold at the top and took profits, okay? And now that the S&P is down 8.5%, maybe you should consider buying in. Maybe you should consider looking at blue chip stocks like Apple, Tesla, Amazon, Microsoft. Maybe you should also consider looking at ETFs. That way you can minimize your risks. You may not have the time and the patience and the knowledge to be looking at individual stocks. So, okay, well, you can buy sectors of the stock market. Minimize your risk, lower your return, but yet you can get a guaranteed return. You know, now obviously nothing's guaranteed when it comes to investing, but when we say guaranteed, we're talking about the factual data of the S&P 500 over the last 100 years. Okay, as long as you're buying and holding over time, you're gonna get a return. Okay, and that return can be anywhere between 7 to 10%. All right, which is gonna be better than a bank account, way better. You know, so you know you can change your mindset to where instead of saving money in your bank account, why don't you just save money in the S&P 500? Right? But it has to be long term. Okay? It has to be money that you don't plan on touching. Not when, you know, you need new tires on the car, now you got to go sell some of your stock in the S&P 500 to get tires. No, that's not what we're talking about. Okay, you can have that sitting in a bank account, in a savings account. We're talking about long term. So regardless whether or not we're going into a recession, regardless whether or not the administration secures a trade deal with China, regardless whether or not the war in Ukraine is ended, regardless whether or not the S&P 500 is down 8%, 9%, or 10%. We have to rinse and repeat. Continue doing the same thing over and over as we slowly but surely build wealth on our road to financial freedom and financial independence. So there it is. Hey, appreciate y'all for tuning in. Like I said, I'm gonna be uploading more videos. Comment, you know, let me know what you think. What's your take on it? Because it's always good to get different viewpoints, you know, and just like in politics, you can agree, you can disagree, but as long as we come to an understanding that we can move forward, it's okay. All right. So I appreciate y'all for tuning in. Don't forget to like, comment, subscribe. Check me out on the next one. Peace.